Assalamualaikum and hi. For today's topic presentation, our group will be explaining about money market and foreign exchange market. So let's get started.
But first, let's get to know our group members.
Assalamualaikum and hi, my name is Farah. To begin this presentation, I will present about the characteristic of money market and foreign exchange market, or also known as forex. Firstly, I will mention about the characteristic of money market. As you can see from the slide, money market has a short-term maturity date, which means it will be matured between overnight to a year from their dates of issue. Next, money market instruments are liquid investment. Therefore, it can be readily be bought and sold for stable prices. There are active secondary market for most money market instruments, so they can be easily sold before maturity and easily convert into cash. Thirdly, the risk of default by the issuer is low. Next, interest earned is low compared to rates offered by another capital market securities. And the last, marketability of short-term security is high. Moving on to the next part, which is foreign exchange market or forex. First, this forex is geographically dispersed and operates 21st hour because it is an informal market with or without physical meeting between the market participant. Therefore, the traders can trade anytime and everywhere except for the weekends when it's closed. Secondly, forex provide liquidity to financial system. This due to the higher trading volume in forex and online trading platform because it happens so fast and simple. This will help market participants to control profit and cut losses. Next, there are dealing room to facilitate forex transactions that links with the financial institution, corporations, money broker, central banks and other market participants. Last but not least, forex trades is transacted via a network of international dealing system. For example, Society for Worldwide Interbank Fund Transfer (SWIFT) is used to effect payments. That is all from me. Thank you. I will pass to my roommates, which is Farahana.
Next, we move to the comparisons of the money market and foreign exchange market in terms of their roles. As we know, both markets have their own importance in the Malaysian market. For the money market, it will help the financial institution and corporation to raise capital and invest excess funds. Indirectly, they can also always maintain appropriate levels of liquidity for the purpose of operational or working capital. Secondly, it will provide facility for adjusting portfolio over the short term. It can be done by matching the cash inflow and outflow through investment in security with suit with the firm's investment horizon. Third, the money market can enable the government to impose monetary policy and funding of debts. The monetary policy can be done through the liquidity requirement and money market operation. However, the rules of the forex market is quite different from the money market since it deals with foreign currency. Firstly, this market will serve the needs of exporters, importers and other foreign exchange currency users. Secondly, it will facilitate foreign exchange trading. For instance, buying and selling of foreign currency or deposit denominated in foreign currency. And the lastly is remittance of foreign currency. It is applicable to those who want to send the money to another country. Next, we will discuss on who are the participants that are involved in these two markets. For the money market, there are four main participants involved in the money market. Firstly, we have government, which is Bank Negara Malaysia, that will act as a regulator, investor or issuers. Secondly, financial institution including commercial bank, investment bank and non-bank financial institution. Third, business corporation. And the last one is an individual also known as money broker that will act as an investor. In contrast, the foreign exchange market is participated by various market participants. The major participants are commercial bank, local companies, foreign corporation, businessmen, travelers, foreign workers and Malaysian public. All of these participants are engaged in the different activity in the market as they deal with the foreign currency transactions such as from import and export activities, remittance activities, trading foreign currency activities and etc. That's all from me. We move to the next presenter, Yang HASYIRAH.
The evolution of the money market started when the government issued MTBs in 1955 based on demand. In 1959, BNM was officially established. The introduction of weekly auction of MTBs was announced in 1973. NBA as well as NID were introduced 6 years later. Later on, Cagamas was established to support the national objective of achieving widespread home ownership and promoting long-term development of the capital market. In June 1997, the CLIBOR was introduced and served as a reference rate for pricing of loans and other products. BNB was introduced in 1993 and the implementation of FAST took place in 1996. In 2006, BNM introduced Bank Negara Monetary Note while Islamic Principal Dealership System was introduced later on in 2009. In 2011, the financial sector blueprints was launched and a new reference rate framework was announced in March 2014. Looking at the development of Malaysian foreign exchange market in 1967, BNM was assumed the sole power to issue currency. A year later, there was an international gold and exchange crisis in March and changes of method in quoting exchange rate took place in October the same year. Commercial banks in Malaysia ceased to transact foreign exchange on Saturdays starting from 17 October 1970. In 1971, there was a suspension of convertibility of USD to gold and adoption of USD as the intervention currency a year later. Malaysia adopted the floating rate exchange system in 1973 and changed the floating rate system based on basket of currency in 1975. The implementation of SWIFT in Malaysia took place in 1989 and BNM introduced ROMs to report FX transactions to BNM in 2001. In 2008, Persatuan Pasaran Kewangan Malaysia (PPKM) established an onshore Malaysian ringgit fixing rate. The renminbi settlement services was included in rentas in March 2012. In July 2016, there was an adoption of a new methodology based on market transaction data and the reference rate is now known as Kuala Lumpur USD MYR reference rate.
Thank you, Yang Hasyirah. Next, I will explain about the legislation of money market and forex. Both money market and forex falls under Financial Services Act 2013 Akta Perkhidmatan Kewangan 2013, which this act functions as to promote financial stability and for related consequential or incidental matters. In Malaysia, money market comprises of two markets, which is conventional and Islamic markets. For conventional market regulations, there are no limitations for the investors. They are free to invest their funds in which sector that they wanted to. For Islamic market regulations, it must adhere to Sharia compliance. Investors must invest in a market that free from usury, riba, gambling, MASIR, and ambiguity, garar. Next, investors are not allowed to invest in commodities like liquor or tobacco, as these two items are haram in Islamic view. And business must avoid sinful products and services in their portfolios. Money market in Malaysia are regulated by Bank Negara Malaysia (BNM). Next is Forex. Forex regulation is a form of financial regulation specifically aimed at the Forex market that is decentralized and operates with no central exchange or clearing house. Its main regulatory requirements is client conduct. This ensures brokers can't make unrealistic or misleading claims or promises. It prevents brokers from advising clients to take risky trade decisions. Next, segregation of client funds. This ensures that the broker cannot use any of the client funds for its operational or other expenses. Other than that, reporting and disclosure. These rules ensure the broker's clients are well informed of the status of their account and the risks associated with Forex products. Last but not least, minimum capital requirements. These rules ensure that clients can withdraw their funds at any time, even in the event of bankruptcy of the broker. Forex in Malaysia are registered, licensed, and regulated by Securities Commission Malaysia, SCM. That's all from me. I will pass to the next presenter, NISA NABILAH.
Thank you, ASMAWI, and I am NISA. I will be presenting the impact of COVID-19 towards money market and forex market. Firstly, money market. The first impact of COVID-19 is government issue the Malaysian Government Security MGS. Government issue MGS beside government investment issue GII and Sukuk to cover our development and infrastructure expenditure. This will not only maintain the integrity of our ringgit but may also fuel fresh demand from foreign investors or buyers. Secondly, credit risk. Borrower unable to make payment on time. Thus, it causes investors not receiving or late in receiving interest from investing in money market security. This is because during the COVID-19, most of the individuals did not have enough money. In conjunction, government provides support programs such as Economic Stimulus Package and Prihatin Package. And lastly, operational risk. Uncertainties of COVID-19 related to the simplification of operational process to enable home office arrangement. Due to the COVID-19 and the implementation of Movement Control Order MCO, employees are advised to work from home. Next is foreign exchange market. Firstly, COVID-19 affecting the currency value. Weakened currency adversely affect the purchasing power of Malaysian ringgit as more Malaysian ringgit is required to exchange for the US dollar. This means that the living standard of citizens in Malaysia decreased due to lower purchasing power. Secondly, risk management. COVID-19 lockdown restrictions were enforced setting off global supply chain disruption. This will affect the number of supply and demand from the foreigner. Finally, lower domestic interest rate. Facilitate the flow of credit to households and businesses. Lower interest rate affects the decreased demand from foreigner investors and put depreciation pressure on domestic currency. The next presenter is Aina will explain the contribution to the economics.
Finally, the comparison between the contribution of money market and foreign exchange market. For the contribution of money market, the first one is promotes the growth and development of the economy. This is done by making money available for different units of economy such as small-scale industry and agriculture. Then assists to develop the economy of country as it provides funds and maintain liquidity. Second, encourage saving and investment in the bank. The lenders will receive reward on their savings from the interest on the money saved. And then, people can easily invest as they have proper availability of funds from money markets. Third, offer source of finance to government. Help the government to increase short-term funds by issuing the treasury bill in the market as to fund various public projects. Next, the contribution of foreign exchange market. The first one is facilitates convertibility of all currency in different countries. This is done by enabling convertibility of currencies of the world become easier under foreign exchange as it assists the international trade, investment, and financial transactions. Second, promote hedging function and facilities. This is the method of reducing the risk of loss caused by price fluctuation in foreign currency by using forward contract, and the risk can be transferring to someone else as it can make more easier for them. Third, provide credit for foreign trades. By using bills of exchange, it enables the importer to use or pay for the international payment as to get the possession of goods, sell them, and then obtain the money to pay off the bill. That's all from us. Thank you for watching.